All right, good evening, Dan. It has been a power-packed week of earnings. How are you holding up this evening?
I'm still alive, still surviving. Earnings season has been fun. And after hours today, we had some other juggernauts come out, and the markets are moving off of that. And these guys are big. They're actually moving and could move the entire market too. So we have to definitely do a deep dive into these guys. First on the agenda, let's take a look at Amazon.
Yeah, Amazon down almost 7% after hours, gapping into the 100. This is a massive, massive gap on Amazon. Although it is into strong support, and you have the 100 here. Personally, I just bought 2 shares after hours down here off of this old resistance, new support, and you got the 100. I have a smaller position, and I just added to it. But let's take a look. Here's the after hours, and let's jump on in to their report here. So first off, they reported $113 billion in revenue. That sounds like a lot to me.
It's more than I have, yes. So I think they're the one thing is they're reporting big numbers. They're obviously a massive company, and most likely whoever's listening to this recording, this video right now, has been touched or influenced by Amazon in some way. Most likely you guys got an Amazon device listening to you right now in your house. So they're everywhere. They have multiple assets of the business. We did see a big drop after hours on these numbers, but I do think a lot of that is just because even with big numbers, people are just expecting huge things all the time from Amazon. So they're feeling pressure, but yeah, they brought in a lot of billions of dollars this last quarter alone. So solid company.
Yeah, I think their expectation was 115 billion. I mean, they only did 113. I mean, what a bunch of losers, right?
They just tried a little harder.
At 27% year-over-year growth, quarter 2 of last year, 88.9 billion. And again, that was like quarter 2 of last year. Wasn't that when like everyone was locked down in their homes?
Amazon was the only business operating at that time.
Yeah, pretty much. But it's like, and they still did 27% better than that. So I thought that was pretty darn good. So that's why I bought some shares after hours. So I know there was a little bit of guidance issues where that they might not have the same double-digit growth for Q3. I think it was in here somewhere. But overall, I mean, that was super strong. And the most important thing for me, I always look at AWS and what that growth is looking like. And so you can see here the net sales of Amazon Web Services, from quarter 2 of last year to this year, from 21 billion to 28 billion. And I think that was 37% growth. Let's see. I'm probably gonna have to zoom in a little bit. Yeah, there we go. So AWS net sales 37% year over year, and then last quarter it was 32%. So it looks to me like that growth is accelerating. So I think that's really great because that's their high margin business, not delivering us toilet paper.
Yeah, I believe I know it was mentioned, not on this call or anything like that, but they were considering doing like a spinoff on that one. As almost a standalone business, which it could be, but that's a huge growth. I don't think they decided or plan on doing it anytime soon, but that could be a standalone business by itself. And I honestly, with the way technology is going, the way companies are using the platform, I think that's only scratching the surface of what AWS can do by itself.
Yeah, exactly. I think that's where the huge growth is going to come from. And again, most of the margin and actual profit. Yeah, here's the third quarter 2021 guidance. Net sales are expected to be between 106 and 112 billion, or to grow 10 and 16% comparatively with third quarter of last year. This guidance anticipates a favorable impact of approximately 70 basis points from foreign exchange rates. So again, I think they might be sandbagging a little bit. So oftentimes what happens is the expectations just get so high with these companies that no matter what they do, they can't get there, and they have to lower the bar somehow. And this might be the Amazon's way of lowering the bar. Bezos just left. And so it gives them an opportunity to kind of reset and then come out and beat next quarter if they guide a little bit low here with 10 to 16% revenue growth. But, you know, again, law of large numbers. I mean, once you're getting into like $100 billion, that's in 3 months worth of revenue. Even 10 to 16% seems like a lot to me.
Yeah. Again, I think the numbers were actually pretty good for 7%. That's, I think, most likely a little overdone um, as far as the sell off after hours on this. I don't know what else people expect Amazon to do. I mean, Jeff Bezos just went to space to see if any Martians wanted to sign up for Amazon Prime, and you know they're searching everywhere, so they're still crushing it. Long term, Amazon's fine. Any dip is going to be viable, and I think that in the future, Amazon does increase. And I like that point of most likely probably a sandbag number just so that they have opportunity to continue to beat and show growth from predictions.
Yeah, and you can see we've had a lot of pivots down here off the 100 just pretty recently. So this gap down again, I think is going to be viable. Although I do think that's going to hit the overall market, which is pretty much at all-time highs. So we could end up seeing a little bit of pullback fueled by this. But yeah, I think longer term, Amazon's definitely going to be higher. And personally, again, I'm not giving anyone else advice, but I bought 2 shares right here after hours, and we'll see what happens. Let's go over to the next one that's just getting absolutely slaughtered after hours is Pinterest, or as some folks like to call it, pin interest. This thing is down 18, almost 19% after hours. What happened to pins?
Somebody stuck a pin right in it and deflated. That's that's pretty much happened. Their numbers are still good. We were going through the reports, and their usage is down, which I think is causing concern. There was that one chart which was showing, yeah. So even from Q2 of 2020, you had 39% growth. Then next quarter, 37, 37, 30, and then 9%. That's a big drop in growth. And it's also showing now a little bit of a trend that the amount of users are decreasing, or as far as new monthly active users, things like that. The one thing to note in this is the revenue per user has gone up though. So they, even though the users are going down, they're still making more and more money from each user that's on there. So there's a little light in the tunnel, but again, this is a stock that just ran up very, very hard into earnings, and they'd have to crush it. But the fact that the users are decreasing is a little concerning.
Yeah, I think that's definitely what the market is reacting to. Like overall, their revenue up 125% year over year from Q2 of last year. I think that shows they're monetizing the platform pretty well. And you can notice that most of their revenue right now is from US users, which, you know, did grow from quarter over quarter, even though the users went down. But then international is starting to grow revenue, and this is what has the most opportunity because it's the smaller number. And it also has the larger number of users. That's kind of interesting, right? So they're getting less revenue from those international users, but they represent a bigger chunk. So I think as long as the international user base continues to stay strong, and if they can stabilize and start to grow again in the US, I think the report was pretty decent from Pinterest because they're doing a good job monetizing their users.
Yeah. And I know people concerned about Delta variant coming out and what's going to happen in the fall, and who honestly knows. But both Pinterest and Amazon, in the case that there are more shutdowns, things like that, I think both Amazon and Pinterest will benefit from something like that. Just because, again, you have more people sitting at home, either ordering things from Amazon or searching Pinterest for new new ideas, new things, something else to do in their lives. So uh, Pinterest is coming off of last year where the users have jumped a lot because, again, people were homebound, and now things are starting to open up. They've been opening up. And I think that does play into a little bit as to maybe why the average user is down as well.
Yeah, it's the summer. People are getting back out, you know, getting after it. They've been vaccinated. They're roaming around. They're probably not locked at home on Pinterest 24 hours a day. But we'll see. We'll see with Delta coming up, or Theta, or Epsilon. You never know which one might hit us next.
Pick
So
a
this
card.
This one is gapping down hot and heavy after hours. Luckily, I did do on this day when this thing was gapping up massively from I think Twitter and Snapchat. I put this super collar on, so I sold a 95 August covered call. I bought a August $73 put, and then I sold an August 60 put. So I did cap my downside protection at about $13 per share, which right now it looks like we are going to be using all of that protection. And then I did buy not a ton. I bought 20 shares after hours, about 10 at 60 and another 10 at like 58.20 or something like that. I'm definitely willing to buy a little bit more Pinterest as this comes down, but I'm not going to rush into it because this is a very, very large gap down. So want it to stabilize a little bit, and then I can start to add back into that position. But definitely glad I got a hedge on this one.
Are you looking more for pyramid on Pinterest?
Yeah, building that position, building the position over time. I think it'll stabilize in here. I really don't think it's going to break this 54 area. If it does, then obviously it'll be in a bit of trouble.
Yeah.
But I think price pyramid and then time pyramid as it stabilizes, I'll start to buy 5 shares, 10 shares at a time over the course of the next couple months, which I think is probably going to take some time for Pinterest to recover from this gap overnight.
Yeah, no, I agree. I'm not a Pinterest user at all. I don't really understand it. I don't like pinning things. I don't care about other people's creativity. So I mean, I don't get Pinterest, but I do see they're making lots of money. There's opportunity. And for me, it's just something that if the chart makes sense, I'll jump in. But I'm going to let it just nosedive off a cliff until I see something that I like on the chart wise. And then maybe I'll build a position. But yeah, I'm not a Pinterest customer.
Yeah, there's no reason to rush into this one. Like if I was establishing a position, I wouldn't buy a bunch of leaps like tomorrow morning. I would buy a few shares, let it stabilize, and then maybe start to leg in to your leaps if that was something that you were looking at doing. So definitely thankful that I know how to hedge with options. For those that are watching, if you don't know how to hedge with options, make sure you check out the rest of our videos on YouTube or go over to reallifetrading.com. We have some free content, and then we also have some really, really great premium content around hedging with options that will probably save you. It saved me a lot of money, especially in an instance like this with Pinterest.
Yep.
All right, so Mastercard. I know PayPal took a little bit of a beating yesterday. Mastercard pretty flat on this earnings gap. It looked pretty solid to me. Their payments were growing, so currency neutral. I kind of like to look at versus adjusted. Either way, it's double digits, around 30% year over year growth. Seems pretty solid to me. What were your thoughts on Mastercard here?
Yeah, again, I think we're looking at some stable growth. MasterCard's not going anywhere. They got their hands in a bunch of things. Someone once told me credit card people are the smartest people in the room all the time. So it's a great business to be in. The one thing I'm concerned in, like just a macro aspect of things, is the rate in which we're printing money. So any of the old debt that they have, they're locked in at certain rates and things like that. But if they keep printing money and the price of a dollar, the value of a dollar decreases, that all of a sudden becomes like long-term, almost bad loans for them. Plus with all the government loans, people paying down debts and things like that. So I'm curious, like a little bit longer term, how that's going to affect things. Obviously they make their money from not people paying their credit cards, but from people not paying it. And they do make a lot of the money from the merchant transactions.
Mm-hmm.
So they still have that to kind of fall back on and things like that. But yeah, MasterCard, Visa, all those guys, I mean, it's just a stable business for the most part. And again, macro is the only thing, but that's going to be before we really see how that affects credit card and lending companies and things like that. It could be 3 to 5 years down the road, at least.
Yeah,
As far as these numbers in particular, they look pretty solid though.
I personally love like the payment industry because I think cash is, going by the wayside. I mean, I don't even know how much cash I have in my wallet, and maybe it's like $100 or something, and it's probably been there for 6 months because I never really use it. I use my Apple credit card, which is a Mastercard, and or I use my Visa or American Express. Like I'm always using cards and electronic payments. I'm not using cash at all. So I think that just continues to bode well for these payment companies.
Yeah, yeah, I agree. And I think just looking at their balance sheet, it looks like their cash did decrease a little bit from December 2020. So it's a little less cash or cash equivalents that they have. Restricted cash for litigation settlements is about the same. Investments increased a little bit. Accounts receivable up a bit. So there to me, I didn't see anything like overly like wow. I need Mastercard shares today. But I think they're just kind of chugging along, and I think they're pretty much on pace. So after hours, I think we're flat ish.
Yeah, we're pretty much flat. So basically, what I hear you saying is, hey, if you're in it, it looks good. No reason to like jump in and buy tons and tons of it. But holy smokes, if you look at this thing on a weekly, like oh my gosh, this thing if you bought it all the way back in the financial crisis, this thing was $11, and now it's at 388. So very very solid growth from this thing. So if you're in it, it looks good, cool. Stay in it. It's near all time highs. If you're not in it, definitely wait for some pullbacks. I don't think I would want to rush in to buy this one. Maybe if it came back into 370, this old high like 366. Obviously, anywhere in this 350 area, I would definitely be buying some personally.
Yeah, I'm looking for bigger drops on this. Just for me personally, as an investment type, obviously tradable is different.
Yep, for
Right
sure.
here for me is not the spot to buy. Literally, we just had all time highs not too long ago. It's got a nice uptrend to it. Things always kind of pan out, and for these, I just think there's other opportunities where you can make a better return on your investment than Mastercard at this point. So if the deal comes in and comes to me, I'm patient. I wait, then yeah, I'll pick up some shares, add it to a long term, something like that. But I need a bigger decrease. I don't think Mastercard goes anywhere. There's no reason that they should, but I need just a much bigger sell off or market correction or something like that.
Yeah, yep, for sure. All right, sweet. Well, big week out there tomorrow. Friday is going to be very interesting to see what the overall market does to some of these gap downs, especially with Amazon. We'll just take a quick look over at the Qs, but it looks like we got this 3-day pennant pattern. And if we open below this high wave candle, I think that might be relatively bearish out there. We also have this divergence on the RSI. So we have higher highs here, lower highs there. So I would love a sell off.
I think it would be helpful to make trading easier, to be honest. I mean, especially if you're trying to build up the long term and you're starting. This is rough to. I mean, there's still deals, there's still opportunities, but yeah, if we get a bigger correction somehow, even like a 10% pullback will just provide so many more opportunities for everybody to make money in the market.
Oh man, a 10% pullback would be phenomenal. Well, eventually it'll happen. It always does. We just obviously don't know when, but we'll see what happens tomorrow. Thanks for joining us again for another earnings report. And don't forget to love life, trade it. Hit that follow, bell notification, subscribe, and you can leave a comment in the